Welcome to The Explainer. Today, we are digging deep into AMD stock. We're going to deconstruct its recent performance using the exact same data and indicators that the pros use to try and get a sense of what might be around the corner.
So let's just jump right in with the big question, right? The one that's on every investor's mind when they see a chart like AMD's. Is this thing a rocket ship that's still got fuel in the tank? Or is it a risky bet that's maybe flown a little too close to the sun? Well, the technical data actually gives us clues for both sides of that argument.
Okay, so to get a handle on where this stock might be headed, we've got to look back at where it's been. And let me tell you, it has been on an absolutely wild ride lately, with some really powerful moves and a ton of volatility.
And wow, this timeline really puts it all into perspective, doesn't it? I mean, starting around $155 in mid-July, the stock just surged to a peak of over $240 by early October. But, and this is key, look at that. It was not a straight line up. Not at all. You had these sharp pullbacks like that big one on August 6th. It's a huge signal that while the trend was definitely up, it was a very, very bumpy journey.
And let's talk about volume for a second. On October 6th alone, almost 250 million shares changed hands. That is just a massive number. Days with huge volume like this, they tell you there's incredible interest from big institutions and regular traders alike. This is the fuel behind those major price swings.
So, how in the world do you make sense of all this chaos? Well, analysts turn to this whole toolkit of technical indicators. You should think of them like clues in a detective story. Each one gives us a different piece of the puzzle about the stock's health and where it might go next.
One of the most basic but most important tools is the moving average. Its whole job is to cut through all that daily noise, all the ups and downs, and just smooth out the price data. It helps us see the bigger picture, the forest for the trees.
And here's what those moving averages are telling us right now. The short term, that 5-day average, is pretty close to the current price, which kind of hints that things are settling down a bit. But, and this is a big but, look at the longer-term signals. The price is way above its 20-day average of around 178, and it's even further above its 200-day average of 130. This is a classic textbook confirmation of a really strong long-term uptrend.
All right, so with that in mind, let's build the case for the bulls, the people who believe this stock has even more room to climb. What are the signals they're looking at?
You've got several key indicators just flashing green for the bulls. The Aaron indicator, which is all about measuring trend strength, is screaming that this uptrend is exceptionally strong. Then you've got the MACD, which tracks momentum, and it's positive, showing that the buying pressure is still very much in control. And on top of that, the on-balance volume, or OBV, which uses trading volume to see where the money is going, suggests that money is flowing into the stock and it's staying there. It really is a compelling picture of strength.
But, it's never a one-sided story in the market, right? There's always a counterargument. So let's hear from the bears, the ones who are seeing some signs of overheating and are telling everyone to be careful.
The bears are pointing to a few flashing yellow lights. First off, indicators like Bollinger Bands and the Money Flow Index are suggesting the stock is overbought. That's just a technical way of saying that recent rally might have gone too far, too fast. Second, the high volatility, measured by something called the ATR, means there's a lot of risk here. And this is a big one. The stock is trading around $216, which is way above its statistically predicted value of about $181. This hints that it might be overdue for what they call a reversion to the mean, basically a pullback to its long-term average.
So this is it. This is the core conflict playing out in the data right here. On one side, you have this powerful, confirmed, long-term uptrend with tons of momentum. And on the other side, you've got these really clear signs that the stock is stretched thin in the short term and is carrying a lot of risk. It's a classic tug-of-war, and traders are stuck right in the middle.
Okay, so given this epic battle between the bulls and the bears, what does the analysis suggest could actually happen from here? Let's break down the key levels and the potential scenarios.
So, in the immediate short term, like for the very next trading session, the analysis points to a pretty stable open, probably somewhere between $216 and $218, with a little bit of a bullish lean. But that's just one day. What about the bigger picture?
These are the battle lines. Think of it like this. The first ceiling, or resistance level, to watch is around $233. If the bulls can break through that, the next big test is that recent peak of $240. Now, on the downside, the first floor, or support level, is around $178. If the price falls through that floor, the next major support is way down at $124. These prices are going to be huge in determining where the stock goes next.
So based on those levels, you can really see three distinct paths this thing could take. In the bullish scenario, the buyers take control, they smash through that 233 resistance, and they go on to challenge the old highs. In a neutral world, the stock just kind of chops around sideways between that 178 support and 233 resistance as the market just digests everything. And then there's the bearish scenario. The sellers win, they break that critical 178 support level, and that could trigger a much, much deeper correction.
This one sentence from the analysis, it just perfectly captures the whole story here. There is undeniable, powerful strength in AMD's long-term trend. But at the exact same time, the short-term risks are high. The data doesn't give us a crystal ball, of course, but what it does give us is a map of the battlefield. And the real question for any investor is this: given that strong trend and that high risk, which path do you think is the most likely?